I'm gonna be going through this one more time here. How I got this payout here, funding pips, obviously, weekly payout, but how I secured it and how you can secure yours too, right, with the same exact setup. Let's get into it. So first we start off with the obviously start of the day here. We'll mark it out with a vertical line. This is going to be Euro USD, right? A pair that everybody loves. So mark it out with the 5 p.m. after rollover there. And first thing you're going to want to do, we'll read that standard deviation, explain why it's there. First thing you're going to want to do if you're playing the Asian session like I do, right? It's going to look like this, and you're going to think, what am I supposed to do here, right? So we're going to mark out our PDAs here, right? So we got some sell side liquidity here. Make sure that just extends over for now. Got some sell side liquidity, right? We got a buy side liquidity here, right? Okay. So the Asian session starts, and you notice that the buy side liquidity gets swept going into rollover. And it creates a little bearish movement here before the uptrend. So we're going to use that bearish movement here as our standard deviation. We're going to plot that to the high here, and we see that the 2 standard deviation here actually lines up with our sell side liquidity. So if the chart's looking like this and you're looking for setup, you just plotted your standard deviation. On that rollover just happened. You got a little bit of an FEG here still. If you want to get more specific, we could, but got a little bit of an FEG there. Take a short position there. Put your stop loss above the high. Oh, fuck. Usually go for a 1 to 2 for one of the 1 to 1, 1 to 2. Doesn't really matter too much, but with these 2 standard deviations, I usually go for 1 to 2. So, set my stop loss a little higher. Let it breathe. Alright, so we got a nice 1 to 2 setup here that already gets bagged within the first 2 hours of the market open. Right, going on into it, we actually see that the 2 standard deviation here actually does get pinged there as well. If we make our tool a little more specific there, if our 2 standard deviation level, clone this, drag it down here, and notice our 2 standard deviation gets hit. And what is the rule with that is 2 standard deviation, we use the 1 and the 2 levels to drag it down to the 4 target. I get more into it in the server that I'll link down below, but if you want more information, definitely check that out. But we'll keep going for an entry here. So right now, since we're actually in a pretty rapid down movement, I'm going to use the 2 level for another entry here. So I'm going to plot a short position right there on that 2 level balance, believe it or not, with a stop loss above all the way of the 0. Yes, it might be a little bit, but if it works, it works. So I'm actually going to plot it right at that 0 there for our 1R play. Make sure both of our targets are aligned. Boom. So then we actually have an entry there guaranteed by not doing much, right? Another guaranteed entry though, and we got our 4 standard deviation all the way from the Asian session. Create a plot line there and a target for our trade. And notice that. Boom. We actually get tapped out going into the New York session. So we actually have 2 plays here before the New York session that we actually could have bagged a total of 3R. So if you're trading obviously a prop firm challenge, risking 2%, 3R, half a challenge done, risking 3%, risking 2.5%, get the whole challenge done. Just get it done. So we got 3R before New York with the setup here. We're gonna keep going on into New York session with the finish off the setup here. We're gonna change the opacity on these, make these a little lighter so you can see. Let's get into it. Alright, so we'll mark out our liquidities here for the New York session. Right, got a buy side liquidity spawn from our actual previous trade there. Look that out. And we also have some sell side liquidity down there from our exit. Alright, so if we're looking at it like this, going into the New York session is, hop on a lower time frame here, 3 minute. New York session open would be right on this candle. Mark it out with a vert candle or a vert line. So obviously we're going to just do the same exact thing we've been doing. We're going to take our standard deviation, we're going to drag it from the downtrend to the last part of the downtrend to the last finish of the downtrend. Right, make sure that lines up equally. See, the 2 standard deviation actually lines up with our buy side liquidity that we could target for a long. Right, but I'm actually going to, since the setup does say 2 standard deviation reject, we're actually going to use this as a plotted short position as well. Right, plot our short position, stop loss. We could do it above the 1 here as well, but we're going to do it above the 2.5 since the 2 should reject and not go above the 2.5 there. Drag our target down to the 0 and the sell side liquidity, boom, 3.6R there. And you're tapped out right before lunchtime, so that should be when you want to be getting out of the market. You shouldn't really want to trade these PM hours because obviously you can just see some chop here. But we got 3R with the setup before New York, and we got a total of 6.6R. You can round it up to 6.7 rounded. Just change that to 6.7%. After New York session. So I mean that's how you catch 3 different trades on one pair if you really need to. There's all the setups are given, you know, with your standard deviations, but obviously if you don't trade all the sessions, here's the Asian session setup, here's more of a London session, here's more of a New York session. So you know, the setup works for all of us. It's just how you use it. I teach more about it in the description below. If you want to check it out, definitely check out the Whop, and I'll see you later.